Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizely, financial educator and your Me Money guide to financial clarity. Each week, we dive into financial concepts and money strategies, but we always tie it back to real life, emotions, mindset, and how money actually shows up day to day. If you're ready for practical tools, mindset shifts, and honest conversations that meet you where you are, not where the world thinks you should be, you're in the right place. Because you deserve to feel confident with your money and good about how you use it. No judgment, no lectures, and definitely no putting yourself last. Hello, real ones. If you're listening, you are one of the ones ready to finally step up, stop worrying about money, and start keeping what you make. Today, we're going to talk about the profit paradox, why so many entrepreneurs with successful businesses still feel broke, and how to finally flip that story. My guest, Leanne Ozaine, created the two-number method to help business owners stop chasing revenue and start building real profit. We'll talk about what traditional financial advice gets wrong, the mindset shifts behind sustainable profit, and how simplifying your numbers can change not just your business, but your life. Leanne Ozaine is known for one bold promise. She helps business owners never worry about money again. Despite being a CFP with more than 20 years of financial experience, Leanne made $1 million in her own business, but nearly lost it all. When traditional advice failed her, she developed the two-number method, a radically simple system that uncovered hidden profit and turned her business around. Now she helps entrepreneurs rewrite their money story, find freedom in their finances, and finally keep what they make. Welcome, Leanne.
Thank you, Linda. What a beautiful introduction. Thank you for having me.
You are welcome. So we had a pre-podcast interview, and when we talked, there were so many similarities around my Me Money method with people with their personal finance to your two-number method, and just a lot of similarities. And I was like, I have to have Leanne on the show. So so glad you're here. I always like to start with people's story. So what inspired you to create the two-number method, and how did it shape your own financial wake-up call?
Well, I don't know that I would call it inspired to create my two-number method. I think I would say I had no choice but to figure out I created a mess. So the quick version of the story is that my very first business was a software company that had with it a component of public speaking and teaching at small business conferences. And so I was just a very busy entrepreneur, and I spent more time on stages than I did in an office. And so my business was doing great. Like, we were selling software and we had a great team and things were going well. And I had a great bookkeeper who sent me the financial statements, but I didn't have any money in my personal account. And I found myself in a position one night, I call it the dark and stormy night, when my husband came to me and he said to me, "How is it that you've made over $1 million this year and you can't help me pay our mortgage?" And I've come to learn over years that that is actually a very common story. But at the time, I did not know that that was a common story. I thought I was alone. I thought I was the only one. And the worst of it is that I had been hiding a secret from him. And that secret was that in addition to making over $1 million and spending that $1 million, I also had a six-figure line of credit that I could not really stay on top of. And I had that six-figure line of credit with the thought that it takes money to make money, and a lot of the paradoxes we're going to talk about today. So to answer your question, the reason I created the two-number method is after that dark and stormy night, I knew my options were either getting a divorce or, which was not ideal, or figuring out what had gone terribly wrong with my finances. And so I wanted to know where over $1 million went. And a profit and loss statement didn't show me that. A balance sheet didn't show me not that I knew how to read them at the time, let's be honest. But what I was able to figure out is where my money went, which we'll talk more about. And so I got to the place where I just knew I had to know what is my profitable investment in my business every month, and how much of the money that my business was spending is actually wasted money instead of actually a good investment, which are the tenets of the two-number method. So I created it never in a million years thinking I would teach it to another human being. I created it to save my business, to to save my ass and to save my marriage. It was not inspiration. It was desperation.
Okay, that's
Yeah.
fair. Wow. Okay. So, gosh, I want to hear the whole story. I mean, I have all these questions lined up for you, but I
Sure.
kind of just am like, I think you should just talk and tell us the story. Tell us,
Okay.
because I'm like, how did it not show on your profit and loss? Like, what was happening? So
Sure.
please
Sure.
just dive right in and tell us all about
Okay.
it.
Okay. Well, so a profit and loss statement, first of all, a person needs to know how to understand what they're actually saying about a business. And a profit and loss statement shows how much money came in a period and how much money went out. And the coding of a profit and loss statement is totally dependent on how a bookkeeper interprets your financial data. And I know this about business owners now, but I was definitely one of those business owners then who was just like, yeah, it looks good. It looks good. What it didn't show me is where my money was going by either fine categories or really large gross categories. So I didn't see it, but also because I didn't know how to read it, if I'm being honest. I just didn't. And so the way I figured this out in my dark and stormy night or the weeks after is, I mean, Linda, I'm not going to sugarcoat this. I was seriously depressed. I was seriously feeling like the world's biggest fraud. I was feeling like the biggest failure, and my marriage was on the verge of a divorce. Like, this was a failure all around. And so I didn't know how to answer his question, which was, where did $1 million go? How could you make over $1 million and not be able to pay the mortgage? So I did the only thing I knew to do when you're desperate, broke, and depressed. And so I went to my bank and I walked in there and I talked to the banker and I was like, can I please have a bunch of bank statements? Like, would you print off my bank statements for me? Because I didn't even have a printer at home. So I went to the bank and he handed me a stack of paper about that thick of all my different business accounts, business credit cards, lines of credit. Go Chase. They were really good to me. And so they handed me the stack of things. And so I found myself in my basement and I just started flipping through transactions, which you don't see transactional data in a profit and loss statement. Not that I knew how to look at that, but I started flipping through and I started to see, honestly, I started to see my priorities. I started to see millions of dollars of business decisions, transaction by transaction over the course of a year. And as I looked at these transactions, I honestly felt so sick to my stomach because what started to happen is I had that rear view mirror approach or rear view mirror view, which is you can see something very clearly behind you. You don't see it as clearly in front of you when you don't know what it is, but when it's behind you and you know what it is, you see it for what it actually is. And so I saw literally millions of dollars of decisions I'd made. And I found myself going, oh my word. Like if I knew then what I knew now about this money, I would feel differently. And I had this feeling of like, I wish I just had that money in my bank account right now. If I hadn't spent that money thinking it would do this thing or that thing for me, then I would still have this money. So I found myself in an if then cycle. And I was really trying to, I'm not kidding when I say I was really trying to piece together the disaster I'd created and try to, deconstruct how I'd gotten there. So I found myself just asking myself, hey, with what I know now, would I spend this money again? And if the answer was no, I was like, well, dang it. And so I just started highlighting the money that I wouldn't have spent if I had the choice to make it now. And that became really the clarifying, really painful lesson is that I saw millions of dollars of business decisions, but they were really shrouded in good intentions. Like I didn't just go waste a bunch of money. I wasn't an idiot. I was actually building a good business, but my business was actually in control, not me. And when I really got honest, I saw millions of dollars of business decisions that didn't bring me any return on investment. And so that's where things started to shift. And so that's when I started to say to myself, okay, the dollars here that I would actually spend again in a heartbeat, like, yes, that investment into that thing absolutely made sense to me. And you and I both have this background of being investment advisors. So this was before I did that work. So it's very clear when a client comes to us and says, hey, I've got money to invest. The intention when we invest is to see our money multiply and grow. That's why people take the risk when they do it. And so without really even knowing how to frame it that way, I just found myself being a normal woman in a normal situation in business, which I didn't know was normal then, I do now, saying, okay, how do I figure this out? And so the dollars that I knew were a good investment, they made me multiple dollars back for every dollar I had spent. And I decided, okay, that is good investment. No matter what, I have to spend that money because I still had a business. I couldn't go out of business, Linda. I had to fix it. And then everything else, even down to my liability insurance that I was like, well, I have to spend it, but it's not a good investment, became what I called, BS spending. I'm like, it's just a bunch of BS. Like it's spending, but it's not profitable spending. And so I got really clear that that all dollars being spent in my business were not equal. And this is definitely one of those paradoxes that small business owners and large business owners deal with, where it's like they really believe that every dollar they spend out of their business bank account is a good investment, and it's not. And that's exactly how I ended up in a $1,100,000 disaster. Is I didn't see the difference between what a good investment was and a bad investment, and I didn't know how to label it. So once I knew it, those became my two numbers. This is my good investment. This is my bad investment, or my waste, or my BS spending. And I just changed how I looked at my numbers with that experience. And now I teach it to thousands of people.
Wow, what a great, I say what a great story. You're probably like, it's not a great story. It's a horrible story. But I mean, yeah, that's the thing. We learn our lessons and then we hope that we teach other people so that they don't have to go to figure it out the hard way like we did, right?
Yes.
So, okay. So when you look back and you say, when you look back at your business and you say, I spent this, this, and this, and that wasn't, you're saying that one wasn't something I would do again. It wasn't a good return on my investment. But how do you know, like you said, hindsight is 2020, like you can see behind you. How are you deciding that now when you look at something? How are you analyzing it to say like, yeah, that's not going to be a good investment?
That's an awesome question. Nobody asks me that question. That's a very intelligent question. The way that I do this now for myself and with my clients is we actually do something that I call the dead uncle's money test. So I'll just explain it to you. So I tell a story. I'm like, okay, Linda, I want you to pretend that you have a dead uncle. Like, okay, you don't even know him. Like he lives in Norway or something. And in his will, he leaves you $100,000. And so you just get a call one day that $100,000 that you did not earn, that you did not have to save, that you do not have to pay tax on. None of it. It's just money that's just coming to you. When that uncle gives you that money, you have choices to make with it. So I'd like you to pretend, Linda, that I'm your awesome, savvy financial advisor. And you come to me, you're like, Leanne, I need to invest this money. And I'm like, okay. And so let's say we have three scenarios. Scenario one is I take your money, Linda, and I invest it in the stock market. And then I bring you back a year later. I'm like, okay, so let's look at the results. We started with 100,000. And here we are a year later, and now you have $150,000 in your bank account. Linda, do you think that's a good investment, a bad investment, or just
That's a good investment.
Perfect. Okay, now scenario two, same story. Year two, you come back to my office after your year, and I say, okay, Linda, we started with $100,000, and the market's been kind of wonky, and now you have $50,000 in your account. Do you think this is a good investment, a bad investment, or
That's a bad investment.
Great. Scenario three. You started with $100,000 and you come back to my office a year later and I'm like, good news. You didn't lose any money. And what you've got, you had $100,000 and now you have $101,000. Is this a good investment, a bad investment, or meh?
Well, it's somewhere between meh and a bad investment.
Okay.
Because the point of it was to invest, not to keep it safe. So
right.
I would say it's still a bad investment, but at least you haven't lost anything.
You haven't lost any. Okay. So what you just did, just in 30 seconds with me, is you had a knee-jerk reaction to ROI. A really good ROI, a bad ROI, and something where you're like, I have to talk about it. I don't really know. It could be bad. And so what I teach people to do is I'm like, anything that you do, just like you did, Linda, that's either bad investment or meh, is probably not good investment. It's probably money that you will spend on your business, and it will actually be wasted dollars. Now, we're not saying waste as in like with judgment around it. It's waste in the sense that it doesn't actually generate ROI. So my best example of that is like liability insurance, where people are always like, or paying for your LLC or something like that. People are like, well, I have to do it. It may be necessary, but let's not fool ourselves. Just because it's necessary, it isn't actually a good investment. And so what I try to help people do is figure out the maximum dollars they're going to let their business waste, the maximum. And what we do is we put those dollars into a bank account, which we'll get more here in a minute. But when those dollars get put into a bank account and the business starts spending it down to zero, then the business owner can control how much waste they have, because it's not just, here's a big pot of money, let's spend a bunch of money out of here and hope that all things work out. That's what everyone does. That's what I did. And it ends up in disaster. And so what we do is we segregate waste from good investment. And when we do that, the business owner can see them separately, and they can be in a moment, in a heartbeat, know exactly how healthy financially their business is. So that's how we begin the process of deciding, what is your waste bucket? What does it look like? And how much money is in that every month? So I know business owners that have $1 million a month running through their business, and they have about $28,000 of waste every single month. And I know business owners like a bakery I can think of off the top of my head, that her waste every month is closer to $3,000 a month. So it's all over the place. But the idea is, how do you know what the waste is of your business? Name it and decide to cap it. And it works like a charm.
So interesting. All right. So the waste is, you're including in the waste the necessary things, or that's a separate thing still?
It's not, as long as the business owner sees it as waste or sees it as necessary but not a profitable investment.
Not profitable, right?
Then I have them put it into their waste category.
Okay.
Some people call it, people sometimes don't like that term. Sometimes my clients just call it this is my zero ROI account. Some people call it their BS account. I don't care. What I want is your financial system to work for you. And so when I'm coaching people, I will guide, right? And I will direct, but I never make that decision for people, because your financial system has to make sense to you. When somebody looks at their two numbers, they need to understand in their own soul what those two numbers represent, not this is what Leanne said they are. So I really want people to decide that for themselves. And so honestly, I can think of one business owner who was like, I know that it's not a good investment, Leanne, but I just can't put payroll tax in the waste category. I just can't do it in my heart. So sometimes they'll leave it in the other category. So ultimately, we just want to know how much is the good investment of your business, so that we can see the multiplication effect in that, and the investments bring us ROI, and then limit how much our business is spending in the non-ROI category or waste.
Makes sense. So I'm thinking like all the expenses that I have in my business right now, which, I pay for different software programs. I pay for, something that helps me push things out to social media, like, tools.
Yep.
Are those waste or are they not waste?
Well, let me ask you this. When you look back, is it good, bad, or meh?
I think it's good because it's building my brand and it's bringing me clients. I'm getting ROI from it. I mean, it's not necessarily direct trackable either, because a lot of it's brand building, but I still feel like it's necessary, because otherwise you're invisible. You have to have visibility.
Sure. So I think you just talked yourself into those expenses are good investment.
Okay. All right. I get it. All right.
Whereas a member of your audience or a person like me would go, I just don't really love working on the social media platforms, and it's like pulling teeth to get me to go there.
Yeah.
And so I resist it, and I put that stuff in my non-ROI category. But you can put it in yours, in your good investment, because it needs to make sense for you. And the other part of that is we're actually connecting your belief about money and some of your beliefs about profit, which is very energetic and actually deeply rooted in psychology. And so for some of us, it makes a lot of sense to say that needs to take root over here, and I want to see it as good investment. But the question becomes, how do we hold it accountable for ROI, which is probably more than we have time to talk about today. But for you, you get to put those expenses in your good investment category.
Okay. All right. Because that was something I was like, is it or isn't it? Like, it's hard to say.
I know. There's stuff that is hard to say.
All right. So I'm going to go ahead and hop into some of my questions here.
Okay.
So I have in here, what do most business owners misunderstand about profit versus revenue?
Oh, good question. What they misunderstand, not intellectually, but emotionally, is most people quantify that I did this too, how their business is doing by how much money they're making. Like, hey, we made $500,000 last quarter. Hey, we're making $1 million a month. Or, hey, I'm making $500 a week. Like, whatever the number is. We, especially newer entrepreneurs, confuse revenue with what they used to experience in paycheck land, which is when you get a paycheck, it's like net of taxes, net of 401k, net of all those things. And they're just used to what I have to spend. That's the life that most people understand financially. And so most business owners didn't like wake up and say, I'm going to go to Wharton and I'm going to go to business school and I'm going to be a business owner. That is not what happens. What normally happens is like, hey, I'm a really good graphic designer. My boss sucks. So what I'm going to do is fire my boss and I'm going to go out on my own. I'm going to do my thing. And so they're just what I call the accidental entrepreneur. They are accidentally overnight a business owner, right? And so that accidental entrepreneur, all they know about finance is paycheck land. And so when they get into business, we really truly confuse revenue with what we have to spend. And so in the world of business, what we have to spend is our revenue. We do have it to spend and reinvest back into our business. But most people don't understand that the formula of income minus expense equals profit is actually broken. It's broken. It keeps people broke. So I'm always teaching people that profit is a choice. But as long as we're running our business with income minus expense equals profit, there will never be profit. You know why? Because a business will consume every single dollar that it generates, especially American businesses with American business owners who have the belief systems of those accidental entrepreneurs that kind of come over from being in paycheck land to business owner land, where there just isn't an understanding of how to invest and manage cash flow. And so we just find that is a big disconnect. So most business owners want profit, and most business owners don't understand that without profit, there is no livelihood for them. So this is why we see so many business owners saying, I'm the worst paid person on staff. I was that. I'm no longer that, but I was that, right? So the disconnect there is believing that the money you're making is the focus. Oh, we made $500,000 this quarter. Great. You know what? I know some people who made $500,000 last year, and they have more profit than you do. And the difference is who learns to keep their money versus who spends it all in the idea of creating tax deductions or spending money to make money, etc.
Yeah. Interesting to think about it that way. So I know that business owners struggle to feel financially secure, even when they're earning, 6, 7 figures, just like you said. And I think that they're hitting on why there is because they're not looking at it in that framework.
Mm-hmm. And or they haven't figured out how to legitimately pay themselves. And I'm not talking about, the conversation that happens between a CPA and their client, where it's like, you should pay yourself this much and that much, right? That's not what I'm talking about. I'm talking about how do you actually take money out of your business and kind of move it out of one pocket and put it in the other in a way that's meaningful and creates a family that's flourishing and creating financial stability for a family. A lot of business owners make the mistake of believing that their business is their greatest asset. And it might be. And most people believe that they're going to go and just at some point sell their business and have a huge, windfall. But that's not actually what happens. Only like 83% of businesses that start and make it past year 5 never have a buy-sell situation. So the business just dissolves and it doesn't go anywhere. So we don't actually, see that business asset building an asset for a family. So talk about retirement planning, talk about, putting kids through school, those kind of things. So there's oftentimes an exchange for the freedom and the flexibility that we get in entrepreneurship that's really sexy and really exciting, but we exchange having a job for this freedom. And a lot of times we live in entrepreneurial poverty, which does not allow for a family to flourish.
Right.
It's the opposite of financial freedom.
Yeah.
But it looks a lot sexier than having a job.
Right. I see so many business owners that are in that constant cycle of feast or famine.
Yep.
Do you want to tell us more about how that interacts with the things that you've been talking about?
Yeah. There's two thoughts there. The feast famine cycle is I'm going to pick on a realtor because there's just so easy to it's just such a good example. So a commercial realtor may sell one huge or under two, huge properties a year and have one large commission. And what they often are doing with people in the feast famine cycle is that they are using lines of credit to kind of get through a year, thinking that's okay. I'm just doing this because this is the only way I know how to do it. And so they're spending a bunch of money, and they are usually let's be honest, Linda, nobody likes to budget, myself included. And budgets suck and people resist them. And so people in the feast famine cycle are often just spending what they need to spend for their lifestyle. And then when the large windfall comes in a form of a huge commission, it's like wonderful. Yes. Like we just made $100,000 overnight, except we have $150,000 line of credit. And now we need this money to be paycheck income for the family. So there's this tension, and it's a horrible existence for that person. And so what I love to advise people to do is actually, when that windfall commission comes in, we use those two numbers and we're like, okay, this is the good investment for the business, whatever it is you have to pay, whether it's rent or whatever, we put it over here. This is the waste. And then we need to actually figure out what the best investment of any business is what it pays the business owner, the owner, operator, business owner. So to make sure that we pull the income out of the business that's needed and force the business itself to live on what it has to live on, especially in feast and famine. It's a hard thing. Also, I would say I see that with people who are Amazon sellers, where they have like a really big, like Black Friday, just big sales that happen in like one 45-day period. And it feels like winning the lottery to them. It's like we have all this money, and we also have all this expense that we've accrued over the year for the business. And so that distinction between what's mine as the business owner, like what's my personal income versus what's the business income, and separating those two is especially hard for the feast and famine business owner. But it's hard for all business owners because business owners are a little bit like, well, they get into this pattern of like, well, the account that has the most money in it is my business account. So if I need to pay tuition for my kid to go to private school and that's the account that has the money in it, now we have a business paying for something that it shouldn't pay for because the business owner doesn't see the distinction between the business money and the personal money. And we get into all kinds of bad juju with that, plus audit risk, plus all these other things. So
right.
It's tough out there. It's tough out there. But a few skills and a few just know-hows of the basics can protect any business owner from those nasties. Just a few skills.
Yeah. Okay, let's talk a little bit about mindset and personality and all the human part of money here, which I think we already are a little bit, or we are a lot. But let's talk about ego and identity and how that gets tangled up in business money decisions, because I feel like as a business owner, that gets a little bit more involved than in personal finance, maybe.
It does. Well, I'm curious, Linda, where do you see that in your work?
Well, as you know, I have the me money method, which is setting aside money for you to spend on you so that you have a container around that and you can learn about your personality and things. And so I think a lot of it is about that, because ego comes into play, but mainly when people are spending more than they should, because they want to show people that they have money. And, we're not allowed to talk about money. It's supposed to be, so you can't walk
Yeah.
around and say, like, hey, I got, $100,000 in the bank, but you can buy yourself a $100,000 car and everybody knows you got $100,000. And then they're wondering, oh, I wonder how much money he's got in the bank. Like, that's where it comes in, where people are spending money to show that they have money. And really, a lot of times, the clients that I work with, sometimes the ones that are not the showy ones have a lot more money because they're being
Yeah.
more responsible with their money.
Yeah.
So I think that that's mainly how I see ego and identity getting tangled up in money decisions and personal finance.
Yeah.
Yeah.
I see it in business finance very similarly. So much to the fact that, or to the point that I really found there's like basically 5 what I call money personalities for business owners. This is very different than personal finances, but it's rooted in like, what did you learn about money growing up? Because most of your audience did not go to Wharton. They are accidental entrepreneurs that are like, oh, I guess I own a business. So I love to help people dig into figuring out what are your instincts of money? What do you already believe about money? And I can see what somebody believes about money when I just look at their bank statement, right? And so as far as ego, though, ego, especially in a business, there is one personality type or business instinct that I call the hustler. And I don't mean that in a negative way, but this person really truly believes that they have to put on a show, that they have to have top of the line everything, that they have to have the big truck, the Rivian, they have to have, the Apple computers, they have to have this professional image or nobody will do business with them. And there's also a quandary that business owners encounter that you don't experience necessarily as just a normal person, which is when you're out and about in the community, any community, online community, in-person community, where everybody knows you own a business. And the thing is, everybody thinks that your business is killing it and their business is not. Or if you're walking around in your skin, you might feel like, my business isn't killing it, but everybody thinks it is. Or why am I the only business owner who's not killing it? And it's because of, I call it posturing. This particular instinct postures like crazy. And so when you're in a community and somebody walks up to you, like if I walked up to you at a bar, Linda, and I was like, hey, Linda, how's your business? Are you going to say to me, oh my, like, I don't know how I'm going to make payroll next week. I'm behind on taxes. Don't have any idea how I'm going to pay my taxes. Oh, P.S. They just instituted a new, sales tax in Washington where I live, and people are freaking out. Like, you won't say that to me. You won't say, I don't know. Like, I'm in debt. I'm like freaking out, or I can't figure out how to sell my product. You won't do that.
Right.
What you'll do is you'll say, oh, you're going to tell me what's good. You're going to say, oh, it's great. We increased sales by 30%. And it's going to be like, wow, right? So this posturing and the ego that comes along with just pretending, faking it till we make it is a real thing that business owners do. And so when I look at the cash and I look at the lack of profitability, or if somebody's willing to look at themselves and see that, they will see that they spend a lot of money for image so that they can make money. So it's the spending money to make money trap, and it's instinctual. It doesn't have to be taught. It's caught by culture. It's just in the DNA of people that go from being regular people to entrepreneurs. So there's 5 money instincts. And if your audience wants to figure out which one they are, I'll talk about the hater too. But if they want to, in my freebie giveaway that you'll talk about, it helps people find which one they are.
Yeah.
Which of the 5. So the other quick instinct I'll talk about is the hater. A hater is the person who kind of like grew up believing that money is the root of all evil and that money is dirty and we shouldn't talk about it and I shouldn't want it and I don't deserve it and it's all of that stuff. And I am telling you, Linda, I think it's like 60% of business owners have this hater instinct, which is terribly ironic because the purpose of business is to make profit and to make money. But it's like, no, we get our identity and our purpose kind of wrapped up in it and we forget the financial stuff. And so the hater is the thing I love them. Their instinct is to be good people. But these are the people that I'm like, you haven't raised your price in 9 years. Your suppliers are charging you twice as much now as they did 4 years ago, and you're eating the cost. you're afraid to tell somebody what you need to charge per hour. So it shows up instinctually that money is bad. I can't talk about it. Like, I can't ask for a deposit. That what if I ask for a deposit, they won't do business with me. It becomes like, honestly, it becomes like eighth grade emotional levels of dealing with things, but on millions of dollars in a business. So
Yeah.
those instincts are really loud. They're really loud. And I kind of call it your secret CFO, like what instinct is actually running the finances of your business. And when we understand it, we can say, oh, okay, I know that I have that tendency, and there's good and bad of all the instincts, but we can call it out and we can say, I see you, you're there. And then there's some strategies that help us be successful on the financial side of our instinct.
Yeah. So I remember this from our pre-interview too. I have 5 personalities that I
Oh,
uncover
that's right.
for personal finance. So mine are the saver, the spender, the avoider, the security seeker, and the risk taker. That's my
Yeah.
5.
Yeah.
And I find I'm surprised at how many avoiders there are.
So
And
many.
people that just don't even think about it. They're just like, I don't even want to think about it.
Mm-hmm.
But so tell me list all 5 of yours and tell me what
Okay.
your biggest surprise is.
So we've got the hero. The hero is the person who uses their business finances to rescue everyone and everything. We have the hater, which is probably like your avoider, who's like, ew, gross, it's nasty, I can't talk about it, it's bad, right? So don't charge enough, don't want to pay bills, don't want to take deposits, that kind of thing. We have a hustler. I'm kind of like that, where it's like, yeah, like they kind of think their net worth is their network, and they're just kind of like big, and they are fabulous, and they tend to spend every dollar their business makes to make their business look really good. And then we have the highbrow, and the highbrow is the person who is very, like, I would say, very distinguished and smart, and they really know how to direct money, but they are completely terrified of losing their money. And then the other one is the hoarder. And the hoarder is the person who just cannot spend money out of their business because they are afraid that if they spend anything, like, I can't hire an employee. I can't do that. Like, I can, what if I pay an employee and I lose all my business? So they're very afraid of being taken advantage of or having their money taken from them. So those are my 5. There's lots of overlap.
Yeah, definitely. Okay, so next question. Sorry, I'm getting a little personal here.
No, I
Who
love
were
it.
you? Who were you when you had the $1 million breakdown, whatever you want to call it? And who are you now? Are you still the same personality, or have you changed your money personality?
Oh, no, I am the same. I was a hustler. I got fast personality and a loud voice, and a lot of my money instincts follow that. I was that person, and I still am. But the difference is that I have learned the value of mastery over what actually makes me afraid. So when I look at what made me afraid, like, why did I behave that way? Where did this instinct come from? I can tell you right where it comes from, Linda. Like, back when I grew up, I was this little girl, little tiny redhead, right? Growing up in this family with all these girls. I was the oldest of 6 kids. Homeschool family, very traditional upbringing, very traditional religious background. And my parents really, truly believed there's a waste of money to college educate a girl. So I'm the only one that went to college. I had to rebel to do it. So I grew up in this family where it was like, a man is going to take care of you. You don't need your own money. You don't need any of these things. And so as early as 11 years old, I remember babysitting or doing something to make money. And my parents would take my money. They would take it away from me. And I just was like, I don't want my money taken from me. And so deep in the heart of this woman now, the part of me that has that tendency, that instinct to be like, no, I want a bigger, more fabulous looking life. And I want my business to look successful. Like, that's still in there, but it's really a response of what I'm afraid of, which is looking poor, being poor. Well, the thing behind the thing is actually being poor or being impoverished and being in a place where I have no choices. That little girl grew up into a woman who had no financial choices. And what I wanted more than anything was an identity and choices that were healthy and good. And so I am still having those tendencies. But I've really learned and grown in understanding, like, I'm afraid of being impoverished and the image of poverty. And so when I can see that, I'm able to go, I see you, I know what you are, and I can build finance around my fear and I can be safe.
Yeah.
Even though I have hustler tendencies.
Yeah. Gosh, our things are so similar, and I think our experience is a little bit similar too. So, thank you for sharing that,
Yeah,
because the idea of understanding yourself and how you interact with money and why is key to both of our lines of work. So,
absolutely.
such alignment there. All right. What's one small step that a business owner could take right now this week to start building a real profit?
I want to have three, but I'll give you one.
You can give me 3. It's okay. Overachiever.
I am an overachiever. Okay, so my guide that you're going to give away to your audience takes people through doing the heartbeat audit, which is what I did when I walked into Chase and I had a big stack this big, right? And so what I like to have people do is go through there and find anything that they can and should cancel. Like, like who's taking the money out of your account that shouldn't? So one of my favorite strategies, it sounds like heresy, but one of my favorite strategies is to call the bank and say, I'd like you to cancel my debit cards, cancel them, like disconnect them, or call your credit card company and disconnect it so that nobody is allowed to take money out of your bank account. And when you do that, everybody that thinks you owe them money is going to come screaming at you. So somebody told me this week that they did that and they did it. And then GoDaddy was constantly contacting them like, hey, one of your domains may not renew or something like that. And at that moment, the business owner got to decide, am I going to do this or am I not? So much of our finances in business are automated, especially that avoider, like you were talking about, who doesn't want to look at their finances. So believe it or not, the fastest hack to take control of your finances back is to cancel your credit cards or just get a new credit card number or get new debit cards issued for your business. And Linda, people are so reluctant to do this because they're like, oh, I'm going to have to remember. Right. You'd have to remember who's taking your money. Yes. This is when you take control back, right? Stop it. And so at that point, people start emailing you saying, you owe me money. You owe me money. And you can decide like yes or no. Oh my gosh. You can find profits so quickly by just doing that. So that's my first hack. And then my second hack, I'll only do 2 today. The second hack would be just go open another bank account and call it profit. And whatever dollars it is that you found when you canceled your credit card, canceled your debit card, and took everybody's fingers out of your bank account, get them out, like go away. Put those dollars in your profit account and just start. Like we just have to start choosing to take profit out of every dollar we make. And if you can build that discipline, even if it's 2% of every dollar you make, it is going to pay off and it changes your habits and changes your belief about your business. So those are things your audience can do in 5 minutes. Cancel those cards. Get new ones issued. Open a profit account.
Great. Thank you. All right. Tell me and our listeners who needs to find you. Who's your ideal person that to come to you and get your help?
If you are a business person who finds yourself saying, I don't understand where all my money went. I don't understand how I made $500,000 last quarter or $500, whatever the number is. And you don't understand why, no matter how much you made, your bank account stays empty, or how many times you've increased sales and you don't see profit, then I can help you. I like to work with people who are open and are honest and are willing to say, okay, I want to grow. I got to learn. Those are the kind of people that I will fall on the sword for and bend over backwards for and really make sure that they succeed. So if you own a business and you're tired of just increasing sales and hoping it'll be profit, because it won't, not till we solve this issue, then I would love to help you.
Awesome. Okay. And how can they find you?
Well, I believe the best way to find me is at gift.profitwithleanne.com, because then they'll get the little cheat sheets from me, or my website is Profit with Leanne. I don't do much on Instagram. It's not my jam, but I do have a TikTok thing. So I can be found on TikTok at Profit with Leanne as well.
Okay, great. And I will include all those links in the show notes.
Thank you.
You so much for being my guest, Leanne. Such a great
My pleasure.
conversation.
So much fun.
Yeah. All right, everyone. Closing nugget for you is profit isn't about greed, it's about growth. When your business starts serving you, not just surviving, everything changes. And
Yep.
if you're still here, you're one of the real ones. Thank you. You are the ones that matter. Thanks for listening. Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagriz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. I'm your Me Money Guide to Financial Clarity, Linda Grizely, and I'll catch you next time as we talk more real money, real life, because you deserve to feel confident with your money and good about how you spend it. The content shared here is for educational and entertainment purposes only. It is not financial, tax, legal, or planning advice and does not constitute therapy or mental health counseling. Please consult an actively licensed and qualified professional for advice or help specific to your situation.